Alright, so moving on, let's talk a bit about points of interest, also called institutional candles, also called order blocks. So there's multiple definitions for this, but the way we simplify it is we just use them as POIs, points of interest. It doesn't really matter. The important stuff is we're gonna look for those as an entry point. Now, where you get these ICs, it's basically the same thing. It's just marking those candles, those good candles. So, for example, if we have price coming down, alright, and then we have this. So price is trending down. This is where we touch a higher time frame area. Price gives a nice reaction, then creates the change of character. And then what we create is a flip zone and also the extreme zone. So always we have two zones where we want to trade. Now these areas, usually we look for entries on the 5 minute or on the 1 minute. We go all the way down to the 1 minute. The reason for that is because you see candles more clearly. You also notice how the price is moving. So once you gain knowledge and practice every single day watching the chart, you'll eventually understand how candles move and you can anticipate their moves. So for me, when I have two areas, I'm always gonna wait for order flow alignment, like I told you before. So because here price was bearish, this is the first point where price is pulling bullish. So let's say this is the 5 minute time, all right, the 5 m. Now, once we have the change of character and price started to come back to the flip zone, we start watching on the 1 minute. We mark the 5 minute flip zone, and then in this 5 minute zone, we're gonna look for a 1 minute POI. And this again applies on every time frame, so we can go down. We look for, because we have the entire flip zone, we look for the first or last candle, how you want to call it, from the extreme that caused that flip zone. So basically, you just mark again the extreme and then another flip zone there on the 1 minute. Once you mark that and you find it, what you want to do is for price to come back. And because this is the 5 minute time frame, when price is pulling back, it's pulling back on the 1 minute. So 1 minute is turning bearish. So in order for us to take a buy in that area, we need to see 1 minute realign bullish. So as this is the 5 minute, it's still bullish, but 1 minute is trending bearish. So for that reason, we need to see, so inside of this, we need to see this. So this is the 1 minute that's trending bearish. It's touching that POI, and then you want to see another change of character and you want to enter on the retest. Why? Because you want to see and you need to see price realigning bullish or the flow becoming bullish again on the time frame you're taking the entry on. And because you're taking the entry on the 1 minute, we need to see price aligning bullish on the 1 minute, and because it's coming down. And now once you have the change of character, all your time frames are in the same direction. So 5 minute and 1 minute is bullish, you can safely enter. And this is the same story. You can even go down, I'll teach you how in the advanced section, but basically in this area you can also look, after you have the 1 minute chart, you can go down the time frames, you can go down on the 5-second time frame and look for the same thing. Because price is realigning bearish, you can look for the 5-second to have the chart retest, and that way you're gonna have the best possible risk reward you can have. That is an advanced entry that I sometimes use in order to have the tight stop losses. Depends on the account you're trading. If you're funding, I don't really recommend it. It's personal, again, don't really recommend it because the commission is high. But that way you can basically have the best possible entry. But because we are so accurate with the strategy, we can also just enter after you have the change of character and price is coming back down on the 1 minute. You can enter anywhere and keep the stop losses below. Once you have the break of structure, here we manage the trade and we go break even on it and then just let it run. So that means this is what a point of interest is. Now, as I told you, you can go down on the 1 minute. So here you see the 5 minute, it's not really that clear. But if you look on the 1 minute, you can see the POI here. So that's called a POI. Because it's an institutional candle, because it's the last candle, bearish candle before the first change of character, you can also mark the 50%. So that way you can be really accurate. Unless you want to wait for price to tap in, which I do recommend. I always recommend waiting for price to tap in, because that way you can have the best entry. So if price is coming down into your entry, if it's better to market execute a trade, because you're going to have a better risk reward. So if you mark the 50% of the candle, you're going to have the best possible entry. Let's look for another example. POIs and points of interest or ICs, institutional candles, you can find them on any time frame. But for us, because we go down from the 4 hour all the way to the 1 minute 4 hour entries or 5 minute, we like to look down on the 1 minute institutional candle. So you can have a 50 minute one like this one, for example. So if you mark it like this, it's also the valid, you see it's a valid demand zone that also acts as an institutional candle because it's the last candle before this push up. So it's basically the same thing. But if you want to go down and refine this, so you can mark the 50% of it, it's not a good idea to just enter based on it. It's best to wait for confirmation. So 50 minutes is like this. If we go down, we can refine the entry even further. So if you go down on the 1 minute, you can see this is the 50-minute candle. So nothing too clear. 5 minute also not clean. 1 minute also not clean. You can look for something that hasn't been retested, hasn't been mitigated. In this case here, it's nothing really. You just have this one, which is higher than the 50%, so it's not valid. You can probably look for the wick here, or you can go further down on the second, which we're gonna go into the advanced section. And here you have this candle right here. This is the last candle before this push up there. And you also have this one, which wasn't retested. You see price never came back into this area, and here also price never came back to retest this area. So they're still valid zones, and they also have liquidity. So if you have something like this is a valid liquidity. This is gonna be in the criteria for entry. You always need to have liquidity taken before coming into your POI. So because we went down on the 15 second in this case, you can go even down. It's not really worth it. Let's see where price reacted. So if we take those, right, you see how price first came into the first 15-second zone, cleared it, and then there was still a zone left there. And see where price came just before news and had a huge spike up. So that way you can basically refine every single POI, every single supply and demand zone, all the way down to the seconds in order to find that perfect spot that wasn't mitigated where price can react from. I don't usually do this because it's just a lot of work to mark the zones. I prefer just waiting for price to come into my zone, to have my confirmation, to be in the time I'm trading in, and just start trading from there. Look for potential trade setup from there. And then if I go back, if I see price is reacting from a point like here, I see price gave a nice reaction, then I'm gonna go look to the left and see where did price react from. Well, it reacted from this here. So what's that? You see the candle that caused this change of character here. So alright, that's a valid demand zone. That's also 1 hour low. Go on the 4 hour. What's that? It's also that 4 hour low from there. It did react from that. It barely touched. Now, this is the 4 hour low that created this break of structure, this major break of structure on the 4 hour to the upside. So that's important. Now, because I know price reacted from that, I can't know for sure price is going to react from that point. But after I see price reacting, I can go take a look and see what happened there. Now here we also have another confluence, which is an institutional level. Institutional levels are usually those that are square. So for EURUSD, an institutional level is usually 1.09, 1.091, 1.10. So these levels tend to be touched quite a few times. So again, for that reason, another confluence. If price is reacting from that zone, I build a confidence into it, and then I start looking for confluences in order to trade from there. So this case, still waiting, but you see how price came and tapped perfectly to the area and the 1.09 level, and then gave a nice bullish reaction. Now, because structure hasn't been broken to the upside on the 1 hour, you see it's just a break of structure to the downside. This is basically a pullback for price to continue lower. So I'm not gonna look for buys, but if I wanna take an aggressive entry, I can just take a counter trend entry here. After I see I have the confirmation as I showed you, take the trade, take profits, and then go on to the next setup. So that's basically it for points of interest. In the next video, we're gonna go over imbalances and why they're important.